morning to all traders, and so welcome to this Monday's Market Insights video. Today I want to talk about FX miners. I have actually three pairs to talk to you about, purely on a technical level, nothing more than that, as it is Monday today and it's Labor Day in the US and Canada. Markets are going to be closed there. Now we've seen the NFP last week actually providing particularly good numbers, right? So for that reason, we saw a decline in most of the indices. You might just start wondering why. Better jobs numbers, right? And we also had the initial jobless claims and continuous jobless claims as well last Thursday, providing somewhat better than expected figures. And finally, below the 1 million mark. Well, when these numbers are coming out good, that means that hopes of a stimulus deal, right, now are fading. Now, if Thursday comes in and we have another jobless claims below expectations in terms of numbers, right, below, then again, the hopes of fiscal stimulus will deteriorate a little bit further. And that would actually be a good reason for the US indices to continue decline, perhaps, right? Now, in Europe, we've had last week Brexit talks continuing, right? Now, the EU negotiator, he said that he returned back to Brussels without anything really solid. The UK's stance remains unchanged when it comes to fisheries, governance, and the level playing field. While now at the same time, we also need to worry about Northern Ireland customs, because Johnson will likely override key parts of the Brexit withdrawal agreement. And that is, of course, going to risk the trade negotiations with Brussels. And if I'm not mistaken, I also read a few lines today about Scotland going for another independence vote. So things between UK and EU might also be the ones that we want to have a keen eye on for this week. So I'm going to go ahead and start with GBP against the Aussie, okay, today. I'm just going to go a little bit further out, to be honest, just to have a better view of what I'm looking here, right? I'm looking at this as a primary wave 1 to the upside, or even an A, right? So I've got an A, B, and a C over here. Now, wave B, as you can clearly see, is a triple zigzag, an ascending triple zigzag, right? Which seems to suggest to me now that, well, prices still got another move to the downside to go, right? And that move is going to be wave C of this correction. Now, if we take into consideration the last swing high over here, right, it's around 2.08. We've had 1 and 2 intermediate done, and we have a multi-structure degree move to the downside. Now, I've drawn the Fibonacci extension here for waves 1 and 2, right? And we get the 3, we get the 4, and we get the 5, exactly as we expect, actually, to when we are looking at Fibonacci extensions. Wave 3 ended at 161 extension, and wave 5 ended at 200 extension, right? We've had, with that move, wave 3 done, okay? And now we are looking at this upside move as a correction. So this could be an A. We're expecting a B and then a C for wave 4, right? And from there, we'll be looking for prices to start moving lower to take out minor 5, which is also intermediate 3. And then we're going to see a 4 and then a 5, 4, at least 157. Now, I'm looking at this as an ending wave over here in 5, right? Okay. But since we haven't actually crossed below wave 1, it could be a case where this is 1, 2, this is a 3, this is a 4, and we're going to get a 5, and then we're going to get an ABC. Okay. So we'll be looking this with a triple zigzag in wave 4, yeah, or we'll be looking at this as still as a part of wave B, okay? And this is a complex correction, of course, because we've got ABC, ABC, we're expecting another ABC down to 179, and then we're going to get wave 4. We want to take the 188 ideally out for this to be considered a good, at least, correction, okay? The other part I want to talk about is the euro against the Q. We talked about this a few weeks back, and it seems to have played out pretty well, actually, right? We've been looking at this move to the downside. Again, this is also, if we just go a little bit further out, well, it's an A, a B, and a C. So we're expecting a 5-wave impulse move to the downside for wave C, right, in the primary degree. I'm looking at wave C, yes, to be some sort of corrective diagonal with 1, 2, 3, 4, and 5, okay, as corrective moves. If we go now a little bit lower, if we jump back down on the 4 hours chart, we've done an ABC for wave 1, okay? Now, this could be an A, B, and a C, and we should be looking, since we took the 182 out, to get to 185 also for wave 2, and then continue lower for wave 3, which means, again, we're looking at a minimum of 71.45 at least, right? That will be the previous low. Or it could be a case where this is an A, B, and a C, okay? Because still, we can have 1, 2, 3, 4, and 5 over here. If that's the case, that this wave 2 is here, and now we move down for the first impulsive move for wave A, yes, in wave 3, which means we ended C wave down here, and this is A, B, and a C. So we're gonna go actually head down for wave 3. But in this case, don't forget, compared to the GBPAUD, that we've done the 38.2, right? So the alternative scenario where this is an ABC is quite possible. And last but not least, I want to speak about the CAD against the Swiss franc. And then again, I'm going to go back down here to the 2 days, and I will show you what I'm looking at. I'm looking at these to be, well, it could be an ending diagonal here in an ABC manner, right? Or it could even be some sort of triangle, right, in the longer term. So with that said, and having done wave 4 here with a triangular formation over here, because it's an A, B, C, D, E, we are moving down. And how we move it down is again corrective, right? As we've actually identified with this, all the formations over here. This is an ABC for a W in primary, ABC for the X, and we're expecting now another move to the downside to complete, right? It looks like to me this is going to be a simple zigzag, right? So we've done A, we're expecting for B to finish, and then we're going to get another ABC for wave C around 64 or so, and then we're going to shoot higher for at least the 76 or so levels, right? We've done the 38.2 at 69.98, but I'm expecting prices to move a little bit higher, perhaps to the 71.21, okay, before we go down to fresh lows.